Hello, and welcome back to another episode of Wealth in Christ podcast, a show where we inspire the masses to become financially free while building God's kingdom. On the podcast today, we have Mr. Jamaal Boyce. I hope I said that correctly.
You did. Thank you. Jamaal C. Boyce. Yep.
You C. Boyce. Mr. Jamaal is a high school economics teacher and an active investor in the stock market. In the podcast, we're going to talk about his journey as an investor and the misconception people have about investing. So thank you for being here, Mr. Jamaal.
Thank you for having me. Appreciate it.
How are you doing today?
I'm good. Had a busy morning, but I'm blessed. I'm good. I'm here and I'm ready to go. How are you?
I'm doing well. And how did you get started in the stock market?
So I got started in the stock market through my father, and he had mentioned it to me when I was in my teenage years, actually. And I was, when you're a teenager, you want to do your thing. Stocks are boring. You don't, really know. But I was interested in it because I know my father was into it. And it wasn't until I got a little bit older, I would say in my 20s, is when I really started to go heavy in the stock market and see the value, and not even just the stock market, but just all different types of investing. I'd start with the stock market because it was the easiest to get started in. And around the time of the 2008 crash, I saw an opportunity because a lot of things were down. And I really, really hit hard into investing then in 2008. And the key thing too with investing is my father had started me investing a little bit when I was, again, in my teenage years. And, I put some money into it, from working my little jobs. And, the money compounded. It started growing. And then unbeknownst to me, I even looked at the account for years. I had no idea it was an account. It was just growing. And then when I was about 20, I want to say 26, my father said to me, hey, have you looked at, your accounts? I said, no, I was, just doing my thing. And I was looking to buy a house, and I had enough money in there for a down payment on my first home. And that was I was like, wow, so with his help and some of the money that I had in there, I was able to purchase my first home on my own. And it just speaks to that, just getting started, getting active in investing, you don't have to be a genius to do it. It can really benefit your life.
That's pretty dope. That's pretty dope. That's a great way to get started in investing. So being that said, you said that you had it, you had the money in the stock market and you didn't pay attention to it. How do you go about looking at your stocks now and your portfolio now?
So I'm more active now in with my investing. And basically what I do is I invest in a multitude of different things. So the stock market is one of them. And, I don't try to check my portfolio every single day. I have multiple portfolios. I have multiple accounts, I should say. And I don't try to check them every day because when you check them every day, you kind of get emotional and you kind of want to put your hands into it. And you got to take a step back and remember, this is for the long term. This is not I'm not gambling here. I'm not, this is for the long term. So, and what I've done is I've made plenty of mistakes. I made plenty of mistakes over the years. I've lost money doing stupid things, emotional things. And so I try to limit myself to how much I check, because you can actually become addicted and go crazy with it. So I'll check my account. Sometimes I'll make a purchase strategically. So yesterday the market was down. I wasn't doing well. It hasn't done well for the past few weeks. So I decided to go into my account and purchase something because things were low. And the old adage is you buy low, sell high. So that's kind of how I do that. And I have multiple other forms of investments that I check out. So I don't just focus on the stock market, but I'll look into it here and there.
That's pretty dope. That's pretty dope. And I guess, being that said, I guess how would you advise somebody who's looking to start investing? And like you said, you started with what you had as a teenager, as a young adult. And, most people now, they think they need like high six figures or some big paying job. So what would you say to someone like that?
So what I would say to somebody is it doesn't matter how much money you make. It's the key thing is consistency. It's formulating a plan and staying consistent with it. So what a lot of people think is, I have to have a lot of money. People always ask me, how much money should I start with? I can't answer that. You could start with $10. You could start with $20. they say that the number one key to becoming a millionaire in life is not actually how much money you make, it's your behavior. So your behavior is what dictates, how much money you're going to make. I'll give you an example. If I'm correct, last I checked, they looked at the occupations that produce the most millionaires. So the occupations that produce the most millionaires in a person's lifespan. Now, teachers across America, they don't make that much money. Across, their salaries aren't very high. They're not, but like third on the list of millionaires. And it goes, and one of the things that teachers have to their advantage is teachers do lesson planning. They create a plan that they try to stick to in their lesson. Now, of course, things happen where it throws you off course, but you have a plan and you have something that you're trying to stick to. Well, most people, when they invest or even deal with their money, they don't have a plan for it. They don't have a situation where they're saying, okay, this money's going to go for here. I'm going to use this dollar for here. I'm going to use this money for this. They just take their money and just willy-nilly spend it, do whatever. You have to have a consistent plan and have behavior. I always tell people discipline is freedom. So the more disciplined you are, the freer you will become in life. You understand? So it's kind of like if you're undisciplined with your eating habits, then you're probably eventually gonna have to diet. I'm gaining weight, I have to diet. That undiscipline took away your freedom. Whereas if you're disciplined with your diet and you want to go on vacation, enjoy yourself. If you're disciplined with your finances over time, you'd be amazed how many nice things you can buy if you're just disciplined. The most disciplined people in the world are the freest people in the world. The most undisciplined people in the world, they have no freedom. They're locked into something that they can't enjoy life. And that's the key. It's discipline and behavior. Pick a plan, formulate a plan, and literally stick to it. It does not matter how much money you make.
Wow, that's pretty dope. That's a great way to explain it.
Yep. Discipline is freedom.
No, that's really dope. And out, that's really dope. I want to go back to something you said earlier. As you was getting through your journey, that you don't check the stock market, your portfolio that often. I guess you want to elaborate about that emotional part. When you're always checking it. Can you talk more about that?
Yeah. So when it comes to the stock market, for example, people get emotional. So for example, when things are going up or good, they feel great. It's like I forget the word, but endorphins, right? You get excited, when things are down and going badly, you get emotional because you see the red arrow going down, you see your numbers in the red. So people in emotion tend to do illogical things. You understand? And the one thing about investing is don't become emotional because you will make illogical decisions. So, for example, when the market was off earlier this week, it was off big, like 500 or 600 points. I didn't look at it. I didn't look at my portfolio because you're going to look at it and it's going to make you jittery to, didn't look at it because the end game is this is for the long term. The market goes in waves. So you have to be strategic with that. And you don't want to get addicted to it. I do check what's going on in the markets daily. I do look what's going on in the markets today. Why is it happening? But my personal portfolio, my stock portfolio, some days I won't look at it. I'm like, market's not doing good today, Jamal. Don't check it out. Let it alone. Because in the end, in your account, it's just a number. You don't make a lose until you actually sell. So until then, it's unrealized. It's just a number. Let it go. This is for the long term.
No, that's a great way to look at it. That's definitely a great way to look at it. And I guess being that said, what would you say is the biggest lesson you have learned in terms of investing so far?
The biggest lesson I've learned is so far, because I told you I've lost money doing stupid things, is investing it's not gambling. So you really have to create a strategy and don't do something silly. Investing is actually not that hard in the stock market, at least. It's not that hard. You have to know what you're doing to a degree. You have to study. You have to learn a little bit. But once you get your plan down, stick to the plan. Old adage is you should invest 15% of what you make, and 15%. The other thing I would tell people is when you are investing or looking to invest, save and invest first and then spend your money. What most people do is they spend their money and then save and invest. So one of the biggest things I learned is I treat myself like a business, and I invest in my business first, meaning me first, before I invest or send money anywhere else. So every time I get paid, every 2 weeks I get paid, money is already allotted and going to me before I pay the light bill, this dinner. And if I can't afford to do anything after I've invested in myself, then I just can't afford to do it. So it's just stick with the plan. Don't gamble, don't do anything silly, stick with the plan.
That's great. And it's funny you mentioned gambling because oftentimes people see the stock market as like a gamble. Because yes, you can do all the research, but at the same time, you can still be wrong.
Mm-hmm.
With your educated guess. So, what would you say to those kind of people who just because of that, their mindset of they think is a gamble, is not 100% sure that you can make money. That's why they stay away from investing. They just save and save.
Well, here's what I would tell those people. First of all, saving money, you're losing money there, right there, because that's a gamble. Because inflation last year, they're saying was 7%. It was higher, but inflation was 7%. Your money in the bank is not getting 7% return. So right then and there, you're losing money. You're seeing the same number, but your purchasing power is lower. So putting your money just in the bank, you cannot save yourself wealthy. It just cannot happen. You have to invest. So the other thing I would tell people is, getting in a car, you can die in a car accident,
Hmm.
but you still will get in the car and take that risk with your life. So, now you can mitigate the risk. You can get in your car, but don't speed. Make sure you check your blind spot. Make sure you can limit the risk, but you still are going to drive your car. And you are kind of, people go in an airplane. You're taking a gamble there also. So, but in order to live life, you have to take little gamble. Not saying that you're gambling, but you have to take some risk. Now, the risk can be calculated. I'm not saying just go out, pick a stock and throw money at it. You got to do a little bit of research. You got to check your blind spot. There's multitude of things that you can invest in. You don't have to invest in individual stocks. You can invest in a mutual fund or an ETF that provides a lot of protection for you. The other thing I would suggest to people is don't put all your eggs in one basket. I have multiple different investments that I do outside of the stock market. So if you do multiple investments like real estate, commodities, so forth, so on, cryptocurrency is popular now. If you have multiple forms of investments, if this investment on the left isn't doing that well, the one on the right might be doing well. And it kind of holds you up. You understand? So investing isn't just the stock market. There's many different forms of investment and investing, and it takes work. You have to work at it. You have to learn it, talk to people who are knowledgeable about it. But that's how you grow your wealth. Most people who become wealthy do not have one form of investment. They have many forms of investment. And that's what I try to do. I have different forms of investment that I invest in. So the stock market was down last week. Okay, that stinks. But my real estate property, the rent still came in. You see what I'm saying? And that's how I have to look at it. If my tenant doesn't pay his rent, the market's still holding me here. I have multiple different forms of investments. The stock market's just one of the versions of it.
That's great. That's great that you mentioned that. And I guess, why is it so important to have different streams of income and not only have one streams of income?
Because if that one stream collapses, well, what are you left with? So I always relate it to, if you look at the United States of America, right? We're one of the most powerful nations on earth. Well, we have an army, we have a navy, we have the Marines, we have the Air Force, we have the CIA, we have the NSA. They all have different functions. They all have different jobs. But in the end, their sole purpose is to help build and sustain the United States of America. Well, your investments should be the same way. I have the stock market. I have two whole life insurance policies. I have 2 accounts for my daughter. I have a mutual fund account for retirement. I have a separate retirement account. I have an account for spending. I have real estate. You understand? And all of those are for the United States of Jamaal Boyce. They all have different functions. So if this one needs support, I can call on this one to support it. If this one needs aid, I can call on that one to support it. You understand? So if you put all your eggs, like for example, in the stock market, and the stock market crashes, well, then there you go. But if you have some in the stock market, and let's say you own a couple of rental properties, now if the stock market crashes, but your tenant's still paying rent, you're doing okay. Not only that, you can take that rental income and buy more stocks because they're on sale because they're low. and build up your wealth that way. And that's pretty much what I do. Multiple streams of income, I might write a book one day. I don't know if I'll ever get to it, but maybe get royalties from a book that still brings in income. I'm always looking for different types of investments, not just one or two.
No, that's great. Yes, I agree. You definitely have to have multiple streams of income. But I guess my question is, with the multiple streams of income, it does require certain discipline to understand the different industries, different sectors. So how do you go about educating yourself on a consistent basis?
So what I do is very, it's funny because I didn't go to school for this. My investing was literally, I talked to my father. So, the Bible says, seek counsel. A wise man seeks counsel, right?
Mm-hmm.
So talk to people who are knowledgeable. There are people out there who are knowledgeable. You just have to search them out and talk to people. So, for example, I'm not too familiar with crypto. I've invested in crypto, but I don't know it that well. I'm still learning it. I have friends of mine who are big into crypto. So I follow their lead. I go to them for counsel. When I was getting involved in real estate, I met with a real estate investor in Albany 2 years ago. This man owned like 110 properties upstate. I sat with him for an hour. I drove up to Albany, 3 hours, talked to this man, and he broke it down to me for free. He didn't charge me anything. There's a wealth of knowledge. You just have to go and search for it. When it comes to stocks, and I might talk to my dad. So what people have to understand is when you're building wealth, you can't do it by yourself. You have to build a team. It's a team effort. You can't know everything. You can't know everything. So you have to build a team of people. So for my rental property, I have my realtor who I'll deal with. He gives me information because I can't know everything about real estate, and then I have my property manager. She helps me out with things. Then I have my dad here for stocks. Then I have my friend here for crypto. Then I have my friend here for real estate. I'm not the smartest guy in the world, but I built a team. And the old adage is, your network is your net worth. I don't know if you've ever heard that phrase before. So what you have to do is you have to go out and find people who are involved in it, pick their brains, and they will help you. People will generally help you, but you can't sit back and just wait for it to come. You have to go out and seek it. I've read books. I go online. I order books. I'm constantly reading books. I'll YouTube something. I'm not on social media. I have no social media account because I don't have the time. I don't have time to sit there and scroll through social media because I'm trying to learn as much as I can with investing and so forth, so on. And that's what it is. So it goes to behavior. What are you doing? Are you willing to go out and seek people who are doing these things to educate you and help guide you on the way? Because you can't know everything. And that's what you have to do. So.
That's great. That's great. And real quick, so we're talking about resource, what's some books that you have read, that's helped you in this process?
One book that I read that I think everybody should read is a book called Rich Dad, Poor Dad, by a man named Robert Kiyosaki. I'm hoping not butchering his name. And it kind of explains how you and I have been, almost everybody has been trained not to build wealth. And it basically, and I'm a high school teacher, and I can tell you, school does not teach you to build wealth. School teaches you to be a worker. It teaches you to go to work and just work and put money in somebody else's pocket instead of your own. That's what school teaches you. And I'm a high school teacher telling you this. And people are ill-trained. They really don't know that what you have to do is build wealth for yourself. And Rich Dad, Poor Dad was a book that I really, really like. There was another book called The Only Investment Guide You'll Ever Need. I forget the author's name. I think it's Andrew Tabine, but I can get that to you later so you can post it. And he breaks it down, about investing and the scams and things like that, what you don't need, what you could use, so forth, so on. A third book I read, very simple, Investing 101. Simple. It's a simple read. It breaks it down. What investing is, the different types of investments, and explains it. Sometimes when you read certain things, if you don't know what you're reading, the word or the language may be a little difficult to understand, and some of the things you might see online and so forth. That's why it's always good to have a human resource who could break it down and simplify it for you. But those are some of the books that I've read. And Rich Dad, Poor Dad, I thought was a very good book. There's another book I have not read. I think it's called The Wealthiest Man in Babylon. I have to check the name. And there's one more book, another book I want to read. It's called The Millionaire Next Door. How the guy living to you might be a millionaire, but you can't tell because investing is boring. You see what I'm saying? Investing is boring. Like people don't like to invest because it's just boring. You're putting money here and, but if you look at a lot of people who are wealthy, you wouldn't know they were wealthy. You wouldn't know they were rich, and it just tells you that, again, investing, it's not about how much money you make. It's about your discipline and your behavior. If you do that and keep learning knowledge, you can be very successful.
Now that's definitely great. That's definitely great. You definitely said a lot there that I do have a question about. But one thing before we go there, you mentioned the Bible scripture which talks about seeking wisdom from those, who are much older than you and much wiser than you. So my question is, how has your faith helped you in this whole process of investing and building financial freedom?
Well, I'm not financially free yet because I'm still working, but I'm trying to get there. But, with the Bible has many verses on money. It does. But one of the verses that I love, there's two verses that I really love as far as it comes to the Bible that I really try to follow. The first one deals with debt. Now, when you have debt, debt can actually be a good tool, but most people don't use it the right way. So most people have debt, and what they do is they owe somebody else money. Proverbs 22:7 basically says, the rich rule over the poor, and the borrower is the slave to the lender. So when you go in debt, you are working for somebody. You're putting money in somebody else's pocket. And it's been the truth of time is where, I buy a car, I'm paying back the loan with interest. How can I invest if I'm giving somebody else my wealth? I call it the transfer of wealth. You can't invest if you're giving somebody else your wealth. You understand? And my key is, I try to stay out of debt as much as I can, unless I'm buying an asset that is going to produce wealth for me, like real estate. That's one of the things I love about real estate is I can leverage the property or go into debt, but I'm not paying the debt, the tenant is, and I'm putting cash flow into it. You understand? Another verse is Matthew 25:14 through 30. And it's the parable of talents. I don't know if you're familiar with it.
Yeah.
Right. And the master gave his three servants talents meaning money. And he went away, he came back. The first servant had 5 talents and he doubled it through trading. The second had 2 talents and he doubled his. But the third servant, he didn't do anything with his talent. He buried it. And the master was very upset with him. And basically what it's saying is, when you have money or job or God blesses you with these things, what you need to do is double your talents, work on your talents. Don't just put it away. Don't waste it. And when you do that, you're honoring God. And when you do that, you get favor with God. And what you then do is return it back to God to help other people. I can't help other people if I'm completely broke financially at the very least. So it's our duty to be responsible with our money. Investing is one of the most responsible things you can do with your money, investing wisely. And that's what I try to follow, especially with the debt. Don't go into debt for silly things. It's just not wise.
That's great. That's a great way to explain it from a Christian perspective. I definitely agree with that. Something I want to go back to, and you mentioned, and I feel like it's going to drag a lot of people. You spoke about, being as a high school teacher, you're not taught to become wealthy. You're taught to basically, work for someone else and make them wealthy. Mm-hmm. And oftentimes I deal with this question a lot, that, whether you should go to college or you should go to school, if it's just about just teaching you to work from somebody else. And, and most people who are wealthy, they have done things, invest into companies, they build companies. Mm-hmm. So what would you how would you advise someone to look at those two different perspectives? Should they go to college, or should they just start the entrepreneurial journey or be an investor?
Well, that's a hard question to answer because it depends on what people want to do. So when it comes to schools are business. So we're talking colleges now. College is a business.
Yeah.
They're there to make money, and case in point, a school will have a certain requirement to get into their school. And if not enough people meet that requirement, they'll drop the requirement. They need to get people in there because they need to make money. So the thing about it is certain careers, you do have to have a college degree. You do. You can't be a teacher without a college degree. It is what it is, you know?
Yeah.
So you have to understand that for somebody, college, you know, I'm not saying college is bad. I went to college. I'm not saying college is great. I'm saying you have to understand the pros and cons of it. Going and saying everything has pros and cons. And if you're going to go to school, rack up $100,000 of student loan debt and not get a job in your field, well, you might be starting off financially off the wrong foot. What are you going to school for? Excuse me. Can you do what you want to do without going to, I have no idea. It really depends on what you're looking to do. Now, with becoming an entrepreneur, that's not easy either. You know, that is not an easy thing to do. A lot of people go out to be entrepreneurs and they fail at it because they haven't done their homework properly, they're ill prepared, so forth, so on. So you kind of got to feel what you're comfortable with. And just understand schools are a business. They're in the business of making money. So what I suggest to people is, a lot of people, is if you wanted to, you can go to community college for 2 years, save a ton of money, and then transfer to another school, you know? And it kind of saves you on the money side, because a lot of kids, they don't understand that when you go to school and you take out student loan debt, you got to pay that back with interest, you know?
Yeah.
And, sometimes the interest capitalizes, meaning the interest that gets tacked on to the principal that you don't pay. That's why a lot of people, they never pay off their student loans because the interest just keeps getting tacked back on. Excuse me. And they always say, why didn't anybody tell me this? Nobody told me this. And you have young kids, I want to go to this school because it's a party school, or I like the colors of the mascot. You can't do it that way. So that's a key thing that's a hard question to answer. It really depends on what you want to do. My daughter, case in point, I'll give you a quick, what I do with my daughter's 4 years old. And my daughter, my wife and I, we both opened accounts for her. She has 3 accounts already and a whole life insurance policy, building cash value. So she has multiple accounts already. She's only 4 years old. So my wife has a 529, which is for college. No, I can get into that another time because I know we don't have enough time, but that's a college savings plan for children as their parents put into it and grow it. On my end, I have a separate account called an UGMA account, where basically I control the account, I invest it, and when my daughter turns 21, it becomes her money. So we're doing both at the same time. And my wife and I, again, it's behavior, discipline. Every 2 weeks, we put money into the account, invest it, and don't even look at it because it's long term. Whether the market's up or down, she's only 4. She has 14, 18 years, to go. And we're running it. Now, the 529, if my daughter goes to college, the 529 is what we'll use first to pay for our college. If my daughter decides not to go to college, then the 529 pretty much has no use, but my UGMA account does. Let's say my daughter wants to start a business, and let's just say I have 100 grand in that account for her. Well, boom, there you go. She can start her business with that 100 grand. You understand? So one of the key things that we have to do is when we become parents, we have to start setting the trend for our children. It's called generational wealth. And that's what I'm trying to do for my daughter. So she has options. So my daughter may come to me and say, Dad, I have no interest in going to college. I can't drag her to college and make her sit in a college class. But at least with that UGMA account, I may say, Celine, what is your plan? Hopefully I give her enough financial education. Dad, I want to buy 3 rental properties with that money and start building assets. Well, there you go. That she doesn't need college, and that's the key. That's a really tough question to answer. It really depends on the person. You just have to understand that college is a business and they're there to make money. They're not there to help you, because there's a lot of people who get diplomas and degrees and they're not doing anything with it. Just understand college is a business. Make sure you utilize that tool to the best of your ability for you.
Yeah, I mean, I definitely agree with that. I agree that that's college is a business. I guess the way I try to explain it is just like, there's nothing wrong with having education, but like you explained, you don't go to a school because party school. You can go to a CUNY, a SUNY school, where you could get a scholarship. And it's funny you said that because a lot of people I graduated with from high school with, we went to different colleges. Some went to state, some went out of state. And I guess one of the big difference, the depth that I own no debt, and while some of them, some of them still owns debt because, they went to school, some of them drop out, so they still have to pay the money back. So yeah, that's definitely um, great advice.
One of the
And
best educations you can have is financial education. So financial education is probably the best education you can actually have, because you can make a lot of money with a degree and still
mhm,
be broke, because you don't know what you're doing with your money. So that's why with college, in my economics class, we talk about student loans. We talk about the cost, a capitalization of interest. And a lot of my students are shocked. They've never been explained this before, you know. It can set you back owing so much money. Like the Bible said, Proverbs 22:7, the borrower is the slave to the lender. So you got to be very careful with what you're doing. I have students who graduated last year. They're starting businesses. They said they have no intention of going to college. That I'm not going to college. I'm starting a business, online businesses, things like that. And so I don't tell them what to do. College isn't good or bad. It's just a tool, but you have to understand what you're getting yourself into. And I feel like a lot of people in college, they really don't understand what they're getting into.
okay. So I guess my question, being that you're an economics teacher and you're also, one of the few teachers who not only teach, economics, but actually active, doing things. How do you structure your class, to let the students know that it's more than to college um, in this world?
Well, so what I do is in my economics class, we have 3 units. The first unit is macroeconomics, which is basically economics as a whole. But the next unit is personal finance. And so through personal finance, I try to teach them to be responsible with their money, how to use a credit card, how to buy a car, interest rates, APRs, buying a home, how much of money should you allot for saving and investing, how much should you save before you start investing. And then I go into investments. And I structure it that way because before you can start investing or you start investing, you should have your personal finance in pretty decent order. Because like you said, investing, you could lose money. I've lost
Yeah.
money in it. So you have to have your personal function in hand. So what I do with my classes, I put the kids in real world applicable situations. So there's one lesson that I do with them. It's about a week where they have to purchase a car. They have to go online, purchase a car, and I set rules for them. They have to put 20% down. They have to be able to pay it off in 4 years, and it can't be more than 10% of their monthly income based off of their occupations that they want to do after taxes. So once they figure all that out, now, because some kids will just try to buy a Lamborghini. And I'm like, you can't afford a Lamborghini. Look at your expenses.
Yeah.
You cannot afford that. So it's real world. I actually pretend to be a car salesman. So they have to negotiate with me the price of the car that they're purchasing. So I make things as real world applicable as I can for them. When we get to the investing portion of my class, I have them pick stocks and ETFs, and they have to research what stocks to pick, and they have to explain why they're picking those stocks or ETFs. What did you see in that you liked? And I actually have them purchase real estate property. So I give them a metric to follow, and they get to purchase real estate property and try to understand how cash flowing and buying real estate works. Again, I can only do this in 3-4 months. I don't have that much time. It's way more depth than that. But I figure my job is to expose them to it so that now that at least they know about it. Whereas most kids leaving high school, they have no idea about this. I didn't learn about real estate investing in high school. I didn't learn about stock market investing in high school. So I try to make it applicable real world, and we track, the stock market, the real estate market, and that's what I try to put them in the situation so that they are actually doing what we're trying to get them to do, which is invest and they get to pick credit cards. So they have to research credit cards, pick a credit card, and explain why did you pick this credit card? What's the benefit of this credit card? What's the con of this credit card? And the students generally like it because it's real world stuff that it's kind of hands on.
That's definitely great, and it's funny, I was very fortunate to have a teacher, just like you, in high school who told me about finance. He's actually a real estate investor. So it's definitely important, to have mentors and teachers like you who can guide people from a young age in that regard. So being that said, I want to ask on your thoughts on the current states, of the U.S. state economic, right now. COVID money is not moving the economics up as as much as it
Right.
was for the past 2 years. So, what's your thoughts on that?
On the economy, basically, on the state of like our country, United States.
Yeah.
So uh, I I see things that worry me. And again, I'm not an economist. I'm just seeing what I see. I could be wrong, I could be wrong. But I'm going to tell you what I see and why I really believe investing. People need to invest their money. Uh, the debt, our country just hit $29 trillion in debt. The United States of America is I think it was like a week or two ago. We officially went $29 trillion in debt. Now, one of the advantages America has is we issue debt in our own money. You understand? So that basically means is when we go into debt, we can actually just print our own money and pay back the debt. The problem with that, and this is what really scares me, is inflation. And inflation erodes the buying power of your money. So I don't know if you've gone shopping, but have you noticed that things are way more expensive this year than they were like a year or two ago?
Yes.
Right. So that makes me very nervous. Now, like you mentioned before, a lot of people put their money in the bank and save their money in the bank. That's not going to beat inflation. Inflation is I think it's high. It's absolutely higher than 7%. So when you put your money in the bank, it's not keeping up with inflation. So your purchasing power is less. So for example, if a bottle of water this year costs $1, next year it might cost $1.10. So if you put $1 in the bank, you pretty much still have $1. That dollar last year that could buy a bottle of water can't buy that bottle of water next year. That's where investing comes in. My biggest fear with our economy is inflation. And I think the stock market will pull back a little bit. It's actually doing that right now. But I think inflation is huge, because if inflation really hits the United States of America, your salary will go up, but you'll have less money. And that's a problem. It'll be harder for you to make it. So that's why I'm really like into investing. And I purchase investments that I believe are a hedge against inflation.
Wow, that's pretty good. You're right. You're 100% right. You just remind me. I think it was the start of this year or late last year. I don't know, maybe like December or something. I had went to like Dollar Tree. And, Dollar Tree is very known for everything being a dollar, and it just caught my attention. They were slowly adjusting the store where they're starting to introduce things that are 125.
Yes.
So
And a lot of people are very angry at them.
yeah.
Yes. But they have to because of inflation. This year, my health insurance just went up. So the price of meat has gone up tremendously. The price of gas has gone up. And so what I do is I invest to try to keep up or beat inflation, because investing can at least keep saving your money in the bank, just saving it aimlessly. I'm not telling people not to save. You do have to save money. You should save for emergencies, 3 months, 6 months, not depending on your occupation. And then you have to do something with that money. You have to invest in something that And to show you how it's just behavior. It's really not how much money you have. So the S&P 500, I don't know if most people know what that is, but that's an index that tracks, 500 largest companies in America. Last year, the S&P 500 did 27% return, which is fantastic. 27% is fantastic last year. If you had just taken your money and religiously put it in an S&P 500 index fund last year and did nothing else, meaning you did no research, you didn't look nothing up, you would have gotten 27% return on your money last year investing, doing no research, no reading, no nothing, just by putting your money in an S&P 500 index fund, which my daughter could do that. You see what I'm saying? That's why investing is such a key. So if you put that same money in the bank last year, you would have got like 0.0001%. You just cost yourself money. That's why I encourage people, it doesn't have to be investing in what I invest in. Take something simple. There's so many simple tools you can invest in and leave it alone. You don't have to study it like I do. You don't have to pick a fund, invest in it, keep putting into it, no matter whether it's up or down. And I always tell people, if the stock market and real estate and everything crashes, you ain't got to worry about your money in the stock market, because it's going to be worthless anyway. So might as well,
You're right. You're definitely right about that. And hopefully, people listen to you because that's something I preach a lot in regards to the ETF, especially the SP 500. If you invest in the ETF plus SPY,
Yep.
I try to break it down. If you put 100,000 at January 4th when the stock market opened, you kept it.
Right.
That's $27
20,
for nothing.
correct. 27%. Doing nothing but just putting in
Yeah.
there. So people have this misconception that investing. Now, look, I'm simplifying it, obviously, but just and again, people don't have to be. There are many people who really invest. Some people, you just have to start investing. You don't have to be like me or my father. He's a big investor. I'm not like my father. He's a big investor. You just have to. Your money has to work for you. That's what investing is. Put your money to work for you. Take your talent and make it work for you. That's what
Mm.
investing basically is. Just to simplify it, and invest in what you like. Some people don't like real estate. They don't want to own a property and so forth. So on. They don't do real estate. Some people don't like. I know people don't like stocks because they don't like the up and down. And they also say with the stock market, I don't have that money until I actually get it. So they like real estate because they're getting cash flow every month. They're getting a check coming in. So I do both. Pick what you like, get your money working for you. My wife has she has a fashion blog. It's where WEAR dot U, the letter U dot GOIN underscore, where you going. She has a fashion blog. That's her investment. So she's investing in that for herself and trying to invest in what you like, what you know. It's that simple.
That's great. That's great. And I guess this is my last question. Where do you see yourself in the next 5 to 10 years?
So in the next 5 to 10 years, in the next decade, I would like to purchase and own 3 rental properties. I have one right now. I'm on the verge of purchasing a second one. As you know, the supply out there is not much out there,
Yeah.
and institutional investors are buying things. But I'm looking to buy a second one this year. And by the time, I'm in my 40s now, by the time I'm ready to retire from teaching, I have 14 years left. I would like to own 3 or 4 properties. That's where I see myself owning 3 to 4 properties. I mean, hopefully more. If I can get more, I'd love to get more. But owning 3 to 4 properties, growing my wealth, growing my daughter's wealth, my wife's wealth, and growing wealth as a family. And that's pretty much what my focus is, just investing my money and trying to grow my wealth.
That's great. That's great. I definitely want to say thank you for your time. This was definitely a very informative interview. I guess my last question, where can people find you or stay in contact with you? And also, what's some closing words you have for people?
Okay, so I don't have social media. I'm completely disconnected from social media. But if anybody ever wants to contact me, they can actually email me, and they can contact me. My email is jboyce, JBOYCE 87 @gmail.com. So if anybody ever wants to hit me up, say I saw the podcast, I want to ask you a question or follow up, how do I do this? I'd be more than happy to help people. I love helping people. That's why I'm a teacher. And they can contact me at my email. They can also contact my wife. My wife, she has her podcast, not her podcast, her fashion blog, where WEAR dot the letter U dot GOIN going underscore. And they can even contact her to get in touch with me there too. And she could relay the message. And what I would follow up to end with people is, building wealth is something we should all be trying to do, trying to get our money to work for us. You don't have, I'm not that smart. I'm average intelligence. I'm just like everybody else. But again, it's discipline and behavior. That is the key. If you have discipline and you monitor your behavior, you will be free in this life. People have to understand that. It really is a true statement. If you eat healthy and your diet is good for the most part, you will be healthier. You'll be freer in life to do things that you want to do. If your diet's unhealthy, you're not going to be able to do certain things at a certain point. Same thing with finances. If you're disciplined with your finances, you'll be amazed how free you will become. I invested when I was young. Time is of the essence. Time is the greatest resource you have because you can't get it back. So I always tell people there's 2 things in this world that once they're gone, you can never get back: time and people that you love. So cherish them, because once time is gone, you can never get it back. So especially for the young people who watch this, you got to get started as soon as you can. Don't just go into it, but get started as soon as you can. Time is of the essence. You'd be amazed how much your money can compound each year. That's why I started my daughter. I started her accounts once I got her social security card, like a month after she was born. I didn't waste time. Time is of the essence. So get into it. Don't waste time. I'm older than you. A lot of young people think this life thing's forever. Life ain't forever. You have to utilize your greatest resource, which is time, and invest your money, be disciplined in your habits, and God will help you.
Amen, amen. Thank you for that. I hope those who are listening, hope you guys like always take notes and go and apply this. Just don't listen to this information. Actually, go and apply it. If you haven't yet, you can subscribe to us. Subscribe to Wealth in Christ on YouTube and Apple Podcasts or wherever you get your listen to your podcast. And also, if you haven't yet, you can download the free study guide I have on my website, which will show you how you can get started in the stock market completely for free. And stay tuned for next week's episode. Enjoy the rest of your day, guys.